Mark, thank you so much for being on the show. You've always been not only a really great friend, and I've had a just an incredible time getting to know you over the last decade or so, something like that.
Even longer, I
Yeah,
think.
yeah, I guess you're right. It
Like,
is a
I
long.
remember where I was, like, in between like HubSpot crazy meetings. I'd just be roaming the halls in like 2011, talking to you, getting the lowdown of like the behind the scenes, uh, narrative that's happened in Silicon Valley.
You know,
From you. Yeah.
it's interesting because as you know, now I'm in Miami and I get this like FOMO feeling every once in a while where I'm like, man, why did I leave the Bay Area? I mean, obviously I left because of, personal reasons. I wanted to be near my family. Parents were getting older, those sort of things. But I do get that feeling sometimes. And I think it's probably skewed because it's based on memories of the past.
Yeah.
And so that
Because
I
it's
don't know,
not there anymore.
it's
I
not
mean,
there anymore.
it's still like awesome to just make the rounds when you're there, but it's not the magic. It's not like magic, but it's like there's just not as much density of everything happening. It's more in a virtual context these days. So
Yeah.
you're not, as you know, you're not missing out as much as
Yeah.
you think.
Well, then I slap myself up and I go, you know what, listen, you're not, 30 anymore. And, your life is different. There's some priorities that are different these days. And frankly, my friends, it was all about the people, right?
Right.
That made it so incredible. And like 90% of the folks are not even there anymore, right? So
Yeah.
there's a new generation which it's exciting to see. But anyways, I just wanted to acknowledge you. For the folks who do not know Mark Roberge and you've been living under a rock, Mark is the author of the bestseller The Sales Acceleration Formula, also professor at Harvard Business School. You were the founding revenue person at HubSpot, now a partner and co-founder at Stage 2 Capital, which is a venture capital firm really focused on B2B SaaS. Again, thanks for being on the
Yeah, you
show.
bet, man.
I
Yeah,
wanted
always
to
happy to
dive
be
in
on.
here real quick on your current take on building B2B SaaS startups.
Hmm.
Especially it feels like every founder I talk to is like, dude, there's 20,000 competitors that pop up
Hmm.
every day. I don't know what to do, right? I don't
Hmm.
know what that mode is. I don't even know if it's viable, because a lot of the time what I hear is like they'll follow these best practices that we've been sort of, pushing or evangelizing over the last, decade, plus. And, they might have some sort of signs of, hey, there's a real opportunity here, but it feels like the barrier to entry is so low to build product these days that, again, this competitive sort of dynamic happens so quickly, and this market really becomes so crowded. Even if there's an inch of an opportunity, and then frankly, like the channels like LinkedIn and these sort of things are noisier than ever. So that said, like, what is your take on kind of the current
Hmm.
status or opportunity in the market these days?
Sure. I think you can look at it from a couple different lenses. In general, if you look at it through those lenses, I think it's a very promising time to start a business. I'll start with just the pure lens of like macroeconomic timing. Who knows? Are we at the bottom? Are we recovering? Is there more bottom to go? Like, no one knows that for sure. But if sort of the bottom was like a year ago or so, you're seeing the NASDAQ come back a bit. Then historically, we looking back on our last bottoms, like when the '01 crash hit and then the '08 crash hit, the 2 years following were exceptional years to start businesses.
Hmm.
And I lived that at HubSpot. And then there's just a lot of data analysis that shows it. And when you step back, like there's a lot of intuitive reasons why. First off, uh, it's harder to get funding in those times, and so you have less competition. Now that flies in the face of your observation, George, that like it, like maybe we can debate whether that's true right now, but it certainly feels true. Like maybe at the seed and A stage hasn't backed off as much, but like historically in this stage of the economy, that's been true. The talent equation is awesome to build a business. And I definitely feel that. And I'm sure we could find data to support that. Like there's just really good talent out there
Mm.
looking. And I think that's one of the biggest drivers on why these vintages do well. And the third one is it's easier to identify whether your use case is nice to have or must have because this, people are tighter to their budgets than in sort
Mm.
of bull markets. And so those reasons add up to like, if you believe that this is like our '03 to the '01 drop or our '09 or 2010 to the '08 drop, then this is a great time to start a business. There's another lens of like AI and the complication there, which we're going to get into a bit. Um, I think there's a lot of evidence that we're in a massive hype cycle there, that if we compare the AI like tech phases and compare that to the cloud and internet, we're sort of in 1998
Mm.
where there's just a ton of investment going in. There's a lot, the business models and use cases seem more iterative than they do disruptive. Valuations are ludicrous. I just think there's going to be a big crash there. So part of me wants to say, go start an AI company because you're you're in the beginning of a tech disruption, but just be really careful that you don't fall into the hype. So I think you de-risk yourself a bit if you do that. And then just get right to your point, George, of like, oh well, it's so easy to build code, write code. That's fine. Just do that better than anyone else.
Mm.
Like that doesn't change your ability to create a defensive moat. Like defensive moats don't have to be in awesome engineering teams that can like, I don't know, like just that's fine. That's a given. But like there's other ways, whether it's like creating a category and a brand, the network effects, like switching costs. Like there's a lot of ways to create defensible modes that aren't dependent on that. So you put all those together and there's some asterisks on it. But I think if we look at the last 10 years, this year ranks in the top quartile of best time to start a company. That'd be my opinion.
It's interesting that we've experienced this quote unquote down market over the last, let's say, 2 years or so in B2B SaaS, and then of course other markets. I think of course that we live in, and so it's more pronounced. But at the same time, if you're in AI, are you, at least from a fundraising perspective, there seems to be this bubble again, right? Like
Yeah,
so it's like this
totally.
this
Huge.
bubble inside a down market.
Oh yeah, it's I always talk to people like, what's it like? How are the funds doing? Like how is the portfolio doing? And it's like managing three economies at once right now. You've got like companies that did a huge round in 2020, 2021, way above any valuation they should have gotten, and they're in a tough spot right now. And furthermore, they might have had a value prop that was like making your employees happy that is no longer a priority. So
Mhm.
like not only do you have this huge valuation that's hard to grow into, but you have a value prop that's been compromised and you're going through a pivot. So
Mm.
there's that whole group of companies. Then you have the companies that were like, started to grow or take a found product market fit in the last 2 years, like after the correction. And that's just normal. It's like normal stuff. Like they're growing 200% a year. They've got good economics. It's like nothing's changed much. It's like a regular venture play. And you got AI businesses that have no revenue and they're worth $400 million.
Mhm.
It's like, so you kind of imagine three economies at once. And it's just the reality of what you need to do. So I would say in 5 years, I would say I would expect the majority of our investments in B2B software to be AI native.
Mm.
I would expect in this year or this fund cycle, it'll be more like 20%
Mm.
because of the hype cycle and the concern of being overexposed there. So yeah, it's a really interesting time of having these multi-threaded micro economies occurring all at the same time.
Well, you said you sort of alluded to the must have versus nice to have, and maybe I'll wait a little bit to ask that because I've been having this debate on whether you have to be a must have, or are
Yeah,
there products out there that are nice to haves but are still viable businesses, right? And is there a sort of continuum of where you maybe may start off as a nice to have and then grow into a must have
Uh,
based on adoption curves in the category and user behavior
yeah,
and all sorts of
yeah,
things?
yeah, yeah. I think that happens a lot. It's a good question of like, is it possible to have a nice to have product and build an amazing business? You think about that for a minute, or see, think if you can come up with an example. It's hard for me to think of that, but I definitely can think of businesses where you were a nice to have and you became a must have, especially like with COVID is an example, but I can come
Yeah.
up with different times, like, like Zoom, like, I mean,
Yeah.
that was a good product, but like, oh my gosh, did they catch a lot of tailwinds, like, any sort of like, there's just a lot of examples. Instacart got a lot of tailwinds, like a lot of services because of that change. And that could happen too on like if there's legislative pressures, like what is the rise in mortgage rates, interest rates done to like create tailwinds for some businesses? Like that happens a lot, I think.
Mm.
I don't know. Can you think of someone who's like remained a nice to have product and they were an exceptional company?
You know, I guess it depends on perspective too. So I've thought a lot about like Calendly, for
Mhm.
example, and even like this tool that we're using, StreamYard.
Sure.
But if I had to spend $100,000, where does that sit, right? Like the fact that I pay $20 a month for this StreamYard tool, and the fact that I have Calendly, and depending on the use case or the organization I'm in, I'm either using it for free, right, or paying some very like modest price, like another $20 a month. Again, if I had to spend 150K on Calendly, would I use it? Um, I don't know. I don't know if I would
Yeah.
then, you know what I mean? Like I
Yeah,
would
I
have.
think with like that's a good example. I think Calendly is closer to a must-have product for me in the sense of like, depending on what your role is, it's just so helpful for so cheap
Yeah.
to just like organize the massive calendaring effort that you have. I think my beef with that use case, and I've loved them forever. I love their team and everything, is like the defensible moat against the large platform incumbents,
Mm.
who can easily just build it. Now, let's not underappreciate and we're going to talk about this a little bit, the PLG freemium motion that they
Yeah.
were able to create. That while you can build the tech, you can't just snap your fingers and have like a million weekly active users created like every week. But like that would be my bigger concern, is just like the defensible mode of the overall, tech.
Yeah. Well, I think we could probably go down a couple rabbit holes there.
Sure.
But let's highlight real quick your talk at SaaStr, because I
Uh-huh.
loved it, and you really got me thinking around
Yeah.
AI, right? And I think for the folks out there, you can Google who will win the go to market AI race, startups or incumbents, and there's a lot of wisdom in there. Just kind of like looking back now, just given the fact that AI is moving super super fast. What's your current take on the impact that AI is having like right now,
Uh-huh.
and maybe since you did that talk, and
Yeah.
then where you think, or
Sure.
if you think it's changed your perspective on how it's going to impact us in the future.
Yeah, it's evolved a bit. I think I'm down the same thread and have evidence around it that I keep looking at. But like I try to give like the 2 minute catch the audience up on the cliff notes is um, I I do like when you study AI these days, you start to get a paranoia that everything we're working on today is irrelevant. You start to get worried that like it's 1996 and we're all investing in these on-premise software companies and none of them are going to exist in 5 years because the cloud is just going to disrupt everything. And that's what I kind of feel about AI. At the same time, like we've already talked about tremendous evidence of a hype cycle happening, that just like the first wave, I mean, let's remember the internet, the first wave of it, we dialed up through AOL, we brought up a Netscape browser, and we did a search through Alta Vista. That was the internet. Like none of those companies were the AI, the internet's, unicorns per se. I mean, yeah,
Mm.
AOL had some, but like they weren't, I don't think they were like the top 20 companies. They all got disrupted by someone else.
Mm.
I think that's where we're at. I know all these earthly movers, I don't know if they live. We couldn't see the snowflakes of the world. We couldn't see the Ubers of the world. We couldn't see like the Twilios of the world, right? And so what do you do? Like, it's a hard spot because it's like, well, you can't just like go back to 2018 and do that stuff because you're going to get disrupted. You also can't like just fully lean into AI and think you're going to. So you have to be very strategic about it. And what we try to look for is innovators' dilemmas, which are situations where even if the incumbents could smell that it was coming, it would be very hard for them to defend themselves.
Mm.
It's Clay Christensen's work. There's many ways to describe it, but that's the way I would describe it for the context that we're in. And so in the talk, I give an example of what that would look like specifically in the go-to-market tech stack sector. Okay, let's say CRM. And so I think there's an innovator's dilemma in there, because and let's also remember to understand the reality of the situation. In 1995, I believe 80% of the CRM market share was owned by Siebel and Act. Okay, just to like grasp the reality of the situation. And I wonder if Siebel was like, hey, should we be worried about this cloud thing, like this internet thing? And I wonder if McKinsey did a huge analysis for them and said, hey, we just spent 3 months interviewing 500 CTOs, and every single one said they do not trust putting their data in the cloud. So we don't think it's an opportunity.
Mm.
And furthermore, we estimate that it'll cost you about $1 billion to re-platform your on-prem product to the internet. So I don't think it's a good business decision. But, Salesforce rolled the dice, made money in the SMB. And then by the time the big companies were like, oh God, like the cloud is actually secure. And if we don't move to it, then we're going to fall behind the competition. And there's a company called Salesforce that we can buy that's already there. And there's a company called Siebel that's more of an on-prem, like let's move to Salesforce. So like there was an innovator's dilemma there.
Mm.
So what's the innovator's dilemma today, specifically in this sector? I think there's one around seat-based pricing, because all the sales tech players, it was a beautiful innovation to like price on seats. You have 100 reps, it's $50 a month per rep. Great, beautiful. But like the promise of AI is to get rid of the seats. So I don't know. I just think if like an engineer was working on a product at salesforce.com to get rid of all the BDRs, I think that would give them pause. That would wipe out $2 billion of revenue. I don't know. I don't think they can go there. And if you look at all the literature from the incumbents, it's all about copilot. Make your salesperson more productive. It's not about like get rid of them. And I know when we talk about this is like, well, what if we get rid of all the jobs, the economy? Like I know that's a worry.
Yeah.
We can talk more broadly about like how we have to think about that because someone's going to do it, whether our country does it or someone else. And there's some danger if someone else gets that power. It's just a reality. And so I think there's an opportunity of an innovator's dilemma to invest in AI technology in the sales tech space that gets rid of the seats, and it would be very difficult for the incumbents to defend against it. I think a similar narrative could be true in DevOps, where again they price on a per seat basis on your programmers. And I think more broadly speaking, there in other categories, we should be looking for like what will the workflow look like in a full post AI rollout world 5 years from now, and is the underlying tech architecture of the incumbents relevant? If it's not, that could be an innovator's dilemma. And so like you asked about what's added to the speech since then. I have more conviction on how to think about as an entrepreneur to catch that opportunity, which is kind of complicated. And you have to like look at the problem you're solving and the vision for your product and business in 3 phases, starting with phase 3 and working yourself backwards. So what you have to do is be like, okay, what is the problem you're solving in a post AI world? How will that be solved? That's phase 3. Okay, like 5-10 years from now, how will it be solved? If you build it today, the market's not ready for it, and the tech probably isn't ready for it either. But like, let's have that vision.
Mm.
Phase 2 is, what are the defensible moats? What are the assets you could be building over the next 5 years to give you a defensible, sustainable moat to win phase 3? And phase 1 is, what is the market ready for today that they'll pay for, that allows you to work on the defensible assets of phase 2, that allows you to capture phase 3. Okay, so let me just give you an example that I talked about in the speech with Amazon and Jeff Bezos. Like, he didn't quit his job as a hedge fund manager in 1996 to become a book salesman. He quit his job because he felt like people would buy online everything from clothes to food to furniture to books. But he knew they weren't ready for it. So he had his phase 3 vision, and he knew the phase 2 asset development would be a decentralized warehouse strategy that wasn't like the footprint of Walmart in really high trafficy areas, but just warehouses in very cheap areas with a decentralized delivery team. And phase 1 that the market was ready for was books, because you don't question the quality of a book. A book is a book. There's a billion different unique SKUs, and the profit margin is pretty good. And you don't have to, like, it's not hard to ship a book. You can't break a book, right? So there's a whole bunch of reasons, and that was beautiful. Same thing with Apple and Jobs and his vision of like the full app marketplace and iPhone. He didn't start there. He started their music and iTunes, right? And in Salesforce, I suppose we could talk about, like, they thought they could capture the whole market, but they knew the big folks weren't ready, so they went with SMB. So that's how we have to think.
Awesome.
I don't know if you have, like, if that raises questions or concerns.
No, I think that makes total sense. As I think about that market opportunity and where do you fit into those phases? And I think like it's just going to be something that's going to have to we're going to have to ride, right, that wave as entrepreneurs and as a space. And I remember the days when I was selling on-prem software back in the early 2000s, and I was running into that same objection that you sort of alluded to, where folks were like, because we did have a cloud-based or web-based product at the time. We weren't calling it cloud. That sort of terminology wasn't there yet.
Yeah, it didn't happen yet.
Yeah, it didn't happen, and people were like pushing back and going, "Oh, no, what are you talking about?" And you're like, "No, we have to have that's not safe. What if it gets hacked, et cetera? We need to actually feel that we
it has
have
to be in our network.
Yeah,
I want to control it. Yeah,
exactly. It's got to be on-prem. It's got to be on, and so on. And then very quickly, like, and I say very quickly, I would say probably within 2 years, and we were competing against WebMD. Sorry, not WebMD. What's it? I'm blanking out on it was medical software, right? So it was also
cool.
Like highly regulated, HIPAA
sure.
stuff had to be HIPAA and et cetera. But within like 2 years, the market changed, right? And so people weren't able to see that. And then you saw a lot of disruption, right? We're scared about these jobs going away. Well, guess what? Those on-prem like systems admin folks,
Of course,
they went away, right?
Exactly.
They had to get new skill sets. They had to now start to learn how to manage servers in the cloud, et cetera. So I know we're, talking a lot about the kind of like the impact that it's going to have on jobs and these sort of things. I do believe, based on how humanity has evolved thus far, that we will work it out. We will accommodate to the new innovations, and everything will be okay. Of course, that might be a little optimistic on my end.
I don't know if it is. I mean, there's a business appropriate and very like research oriented view. Like, when I talk to the economists at Harvard, they've gone back and looked at like the rise of mass production, the Industrial Revolution, the personal computing digitization world, and the internet. And similar narrative has occurred in all of them, which is like, this is going to lead to rapid job destruction And in fact, later it created more jobs. So that's their argument. That's what the research shows. I don't know if I believe it, but that's a sound hypothesis.
Yeah.
And like I have, if it doesn't, then I feel like we are more in a human society evolution that is more on par when we went from a nomadic society to a farming civilized society, and from a farming civilized society to a feudalism society to a democracy and capitalism society to the next phase when there are no jobs and it doesn't matter. But that's probably not for a business podcast.
Maybe, right?
Yeah.
But what's interesting about what you just said is it does feel like that, Mark. Like the
Yeah,
stuff that we're
for sure.
seeing right now is just a complete paradigm shift. There's these guys who have an AI tool within the go-to-market space that allows you to essentially replace a sales manager
Sure.
helping you with code calling, you
Sure.
know,
Yeah.
practice, right? Or training. Like that massive shift where it's just like there's no longer a human doing it. Like that is
Yeah. I mean, I
pretty
think in
dang.
10 years, buyer bots written by AI will buy from seller bots. I don't think there will be salespeople, except for maybe the most complex
Yeah.
stuff, but eventually that will get disrupted. But that's just my view. It's very
Yeah.
hard to that's just to back that up right now.
Yeah. Well, if you do the math, that you can see it unfolding that way, right? So
Yeah, for
I
sure.
don't think so. Quick question: we've talked a lot about PLG over the last few years, and
Oh
we've
yeah.
done podcasts on that. You and I, right?
Yeah.
What's your current view on PLG? I think there's been
Yep.
so much discussion about it. What it looks like, how does it actually show up within an organization, and how it
Mhm.
looks like at SMBs versus enterprise, et cetera. I guess, based on what we've seen over the last few years, what's your current take on it?
Yeah. I would say it's lost some of its allure, but I'm more bullish on it. So first off, I think we have to, and partially because of that, we have to not these are not zero sum games when we're talking about AI and PLG and cloud. Like PLG is largely a go to market motion. I mean, it could be perceived as a little bigger than that as a business model, but AI is not a business model. AI is a technology like foundation, and cloud similar thing. Like that's more of a tech architecture decision, and PLG is more of a go to market motion, perhaps even a business model. So they can both be done. You can have a PLG AI company, a PLG cloud company, you can have an AI cloud company. You know what I mean? Um, so I still think we're in the early innings of the exploitation there, and I think because it's a business model that does a lot of has a lot of nice advantages to it. In the early stages of a business, I think one of the potholes most folks fall into is they confuse customer acquisition and revenue acquisition with product market fit. And I just think that the pure, better definition of product market fit has more to do with customer value creation that leads to customer retention. It doesn't have much to do with
Mm,
your ability to acquire customers.
mm,
Now, granted, when you have very strong product market fit, word gets out and selling gets easier. So, yes, there is this but there's a lot of situations of people having an amazing go to market message, an amazing marketing team, and it sells like hotcakes, but it doesn't deliver on the message you're promising.
hmm,
So PLG naturally roots a business in a better definition of product market fit, because usually the opening north star of a PLG company is not revenue, it's weekly active or daily active users. Like, do people keep using your product? And that
mm,
is 100 times better. So I like that as a starting point for that reason. It puts the pressure on the right spots. And then the second thing I love about it is it's a disruptive business model, go to market model, because it's if all of a sudden the category takes off and someone is like, oh, cool. I heard there's a whole new set of apps that allow you to automate your calendaring. And it's oh, cool. I can talk to this company here and I can get a demo. And then it's something like $100 a month. Or I can just Saturday night, I can just download Calendly and use it for free.
yeah.
That's it's such an obvious decision that you just are going to disrupt whoever's out there that's not PLG. And the third part is if you take off, it's hard for someone to disrupt you. Like if you're a cloud company and you create this new category and this new business and you're charging $1,000 a month and it takes off, people are going to copy you. And guess what they're going to do? They're going to charge $200 a month. And they're going to make some hay. You know what I mean? Like if their product probably doesn't work, and you had to hope for that. But if you're a PLG company and then your category takes off and then someone's like, hey, we should do that too. Well, your starting price is zero. Yeah. Like, how do you easily attack it? Right. So now I've written a lot about how PLG is not applicable to every category. If you're trying to like create like new HR software for companies to manage their entire employee onboarding, benefits, and payroll structure, like that's not a PLG play. So I'm still very bullish on it, and I think the fact that because the market has shifted from grow at all cost 3 years ago, which was great for PLG, to a heavy focus on unit economics and revenue sustainability, the general investor market, PLG has fallen out of flavor of. And I love those opportunities when you have opinion that you believe the general market's incorrect. And that's where I'm at right now.
Awesome. Well, I am a big fan of PLG, and I think if you can get the PLG motion to work, even if it's just a user acquisition channel, right? Or another,
Sure.
Another door into the funnel, and then you continue with your more sales or human-led motions, I think that's still a win, and there's huge opportunity there. Speaking
and you
of
remind me of a fourth point real quick, George, of that is like, a lot of people get this confused of like, I'll do the sales led first, then go to PLG. Almost impossible to do, because what you'll end up with is whatever, 50, 100, 200 customers paying you $100 a month. And now you have to like come up with a free product that's not going to cannibalize them. It's really hard. Versus like if you start with PLG and go to sales led because PLG doesn't work, beautiful. You try PLG for 6 months, doesn't work. And now you go to sales led. Now you have like thousands of weekly active users you just start selling into. Yeah. And you have a very low friction product experience. And you've checked off the box that like our PLG attackers coming later on. Nah, we tried it and we did a good job on it. It just didn't work. So anyway, I cut you off. What was your next one?
Yeah, no, thanks for highlighting that, because I was thinking about the product experience. You touched on that there.
Yeah.
The product experience that has to be in place for PLG to even be remotely viable, right? Like we've all backed into like selling crappy software, and you're just like, you need to throw a bunch of humans in there to support the onboarding and the usage and training and blah, blah, blah. Right. Obviously, like PLG, you can't even, remotely do that. Right. So I think to your point, it really enables for a much better product experience, even if you abandon the actual like pricing model. Right. So just, that really resonates with me.
Yeah.
One thing that you mentioned earlier that I wanted to kind of wrap up with is product market fit, right? And I was initially going to ask you what's your definition of product market fit as you see it today, and what are some of these false positives and also false negatives, right? Because we deal with this stuff as founders all the time, but also wanted to add a question in that whole sort of set of questions, which is, are we saying that product market fit is only something that we can really truly feel confident that we've achieved once we've seen retention rates be at a good place?
Yeah, I think if we're staying in the B2B software realm, because it's different for apparel companies and retail companies, whatever. But if we stay in our B2B software realm, if I had to pick one metric to like give me tremendous conviction with product market fit, it would be customer retention. Because it's like they tried your product, they were sold to, they tried your product, and it was good enough that they like want to keep using it. The challenge with that, and especially in the early stages, is it tends to be a significant lagging indicator. Like if we have a quarter here where we sign up 20 customers, I have no idea what the retention of those customers are for like 6 months, 9 months, 12 months, right? So we have to create a leading indicator of retention. We have to like invent for our business something that's observable in the first month of a customer's life cycle, that if that occurs, they'll be with you forever. And if it doesn't, they'll probably quit. And that way I have a much shorter term measurement of my product market fit. And that's something that I've done a lot of writing on, a lot of frameworking on, the concept of the leading indicator of retention, or LIR. I think it's spoken in the PLG arena as like aha moment to some degree. So there's been some studies around that. The moment of truth. I don't know. Like there's a lot of different ways to describe it. And so like Slacks was like, I think if you send 2,000 team messages a month, right? And over time, as you scale, you can measure whether that statistically correlates. So you can get confidence that you have the right metric. But I don't think there's like a universal one. It's not always like Dow Wow Mao. It's not always they set up in 30 days. It's not always they use the product. It's like it's one of those cool like entrepreneurial creative opportunities where you try to think about what it is for your business. And I've written on directions on how to do that.
One last question, and I think we can wrap up, and really appreciate your time. Are there any sort of, or is there rather one specific, because I'm sure there's quite a few, one specific sort of indicator that you would think, or signal, let's say, that you really, really stand behind, that is a false positive, especially when you're early stage
Yeah.
and you're talking to the market, and
Mhm.
maybe you're getting feedback that's suggesting, boy, I've
Yeah.
talked to 200 folks, right? And they're all
Yeah.
saying, yes, there's this problem.
In terms of business metric, it would be top line revenue growth. Is that what you're asking?
Or it could be that, but or it could be something maybe a little more, I don't want to say qualitative, but as you're having these, let's talk about like customer discovery, right? We're
Yeah.
going out there, we're identifying a persona, we have a thesis around a
Yeah.
problem to solve based on our own experience, but maybe we're trying to figure out, is this just something that happened to me in a vacuum,
Uh-huh.
or is this something that's broadly applicable? And I think that there's a big enough opportunity here
Mm,
in the short term.
mm,
Like
yeah.
a lot of the times, and I'm speaking kind of from my experience, I've gone down these experiences where I've gone out and talked to the market, and I've talked to hundreds of people, and they've said, boy, yeah, that really like
Right.
sounds like a problem. But then when you actually give them let's say an MVP, they're not
Yes.
using it,
Right.
as an
Exactly.
example, right? So
Yeah.
that could be
Yeah.
a
I,
false
I deal
positive.
with that all the time with my students and have success in overcoming that issue. To some degrees, the product management realm talks about that in the sense of a mom test, which is when you ask your mom if she likes the thing you built or the picture you made, she always loves it, even though it might suck, right? And so you can get sucked into that. And so the technique I use to mitigate that risk is, you go, first off, you go out there, most people know you don't go like, here's my product, what do you think? That's terrible, right? Instead, you go out and say, "Hey, I'm doing research on this problem. Can you tell me how you think about that problem?" That's going to allow you to like get a truer sense, because they have no idea what your hypothesis on your product is, and if they start describing your product, it gives you a lot of conviction.
Mm.
Ironically, that ends up being your discovery call even 5 years later when you're scaling up your business, which most people don't connect. But the more important piece is when you get to the end of that conversation and you're like, "Hey, George, thank you so much for elaborating on how your business is thinking about solving this problem and the solutions you've tried and the optimal solution, if you could create it from scratch, what it would look like." It's really funny that I've had conversations with 50 of your peers and they all said the same thing. And so we're building an MVP that's exactly what you were saying, that does X, Y, Z, and will yield to this outcome. We expect to launch it in July, and we're going to be charging $10,000 a year for the product. But what we're looking for now is we're looking for 5 design partners to commit, basically sign a letter of intent, and we're going to give them an 80% discount on the first year. So it would require a $250 deposit, and then once we launch the MVP, you would pay, whatever the math ends up being, $1,000 for the year. Would you be interested in signing that letter of intent? That allows you to mitigate the mom test risk. And if you get like 5 people to sign a letter of intent, that's an investable situation.
Awesome. Mark, thank you so much. I really appreciate your time. I know you've hung out with us here a little longer than we planned, so very much appreciate it. For the folks out there, go to LinkedIn, search for Mark Roberge, follow his content. You can check out Stage Two Capital as well. There is a ton of content coming out of that organization, but also a lot of really awesome programs. So whether you're early stage and you have some early traction, there's a program for that. And then I know that you're going up to what, like Series B around that these days, or
We lead series like pre-series A's in our venture fund, and then we have a catalyst that's more like just starting the revenue time kind of
awesome.
fund. Yeah,
Cool. Well, Mark, have a great day and hope to see you soon, whether in Miami or if I go up to Mass.
for sure. Thanks, George.